So this is part number 17. So in the previous video, we looked at the entire process. You start with filtering. Even though you are trading the weekly time frame chart, you have to filter for stocks on a daily basis because you never know which stock might show up in our criteria, right? So step one is filtering. Then step two is shortlisting. Step number three is stock selection. Then you check the market conditions for position sizing. Then when you get you volume when the breakout is happening, you execute the trade. After execution, you put the stop loss, which is risk management, and then you manage the trade. So it's a clearly outlined process. I encourage you to follow this process for every stock that you choose. Remember, the market is not there to give you money. The market is there to take your money. The market is not there to give you money. The market is there to take your money. So the more strict you are with your criteria, the more high probability the setup is going to be. Okay. And I have summarized the criteria. You can probably take a screenshot of this thing. We have already discussed this. I have made one video for each of these criteria. This is just the summary, but this is about two things: stock selection and position sizing. Because when we talk about market, the only reason why we check the market is for position sizing, because when the market is weak, there is a 75% probability of losing money, 25% probability of making money. So when the market is weak, we have to go in with a smaller position size. Okay. So filtering, shortlisting, stock selection, position sizing, trade execution, risk management, trade management. Very simple. I mean, all professional trading, whether you're trading futures, options, cryptocurrency, intraday, whatever, this is the base. Okay, this is the foundation of professional trading. Have a look at this criteria. Okay, this is the basic qualifying criteria. Not all stocks will meet all of the criteria. Our objective is to see how close a stock comes to all of this criteria. Okay, so for example, in fundamental, you have 12 different criteria. So you want to see at least 50% of the criteria to be met, right? So let's say at least six. Even six is not enough. I would prefer seven or eight criteria to be in my favor. That would be considered strong. If nine or more than nine are in my favor out of 12, that's very strong. Okay. So I categorize stocks between strong and very strong. Okay. The elite stocks that meet our criteria. Okay. So liquidity, we already know it should be listed on NSE. For those of you who are trading the US markets, you can customize this as per the US market. So the stock should be listed on NSE, no red flag, no restrictions on the stock. Price should be more than or equal to 20 rupees. Average daily volume should be more than or equal to 200,000 shares. Average INR daily volume should be more than or equal to 1 crore. This 200,000 shares is like not mandatory, but if you go below that volume, you will experience volatility. Okay. So that's liquidity analysis. Comparative also, we have discussed the relative strength should be more than or equal to 70, preferably more than 80. Buyer demand should be A or B, preferably A. Industry group rank should be less than or equal to 100, preferably less than or equal to 40. Industry strength, the industry group rank should be improving from 6 months ago. And the stock should be a market leader in that particular industry group. Leader in terms of sales growth, EPS growth, ROE, margin, and relative strength. Okay. Leader not in terms of market capitalization. Generally, such kind of stocks come in the top 3 or 5 in terms of market capitalization. That is why I simplify that and I look for the top 3 or 5 stocks in the industry group in most cases. Technicals, remember, technicals is the criteria that we use for shortlisting. That is step number 2. We don't use fundamental criteria for shortlisting, and I have told you the reason for this. Okay. So pivot point and base should be there clearly marked. There should be buying zone, stop loss zone, green zone clearly marked on the market Smith chart. If they are not marked, you can do it on your trading view chart. The price should be between the pivot and the 10-week simple moving average so that you are in the base. When you are looking at the weekly chart, you are inside the base. When you are qualifying a particular stock, you're taking it under consideration. If a stock has already crossed the pivot point, probably we are late. Okay. Now, there might be times when the stock is inside the blue shaded area, right? No problem. We can take the trade because uh, the stock is not yet broken out of the blue zone. But while shortlisting, generally you will need to have this criteria in your favor because you want to buy when the stock is breaking out of the base, right? So you have to be there with the stock when it is forming a base, and when it is breaking the base, entering into the blue shaded area, that is when we need to take our entry on high volume. Then the remaining four are Mark Minervini trend template criteria: relative strength more than or equal to 70, price above the moving averages, the 52-week high low criteria, right? We have discussed this. Market conditions, confirmed uptrend under pressure, rally attempt, confirmed downtrend. In a downtrend, we don't initiate fresh positions. And on the existing positions, we keep our stop loss to break even, maybe lighten up on our positions. The remaining three criteria, we can take a trade, but rally attempt, we have to go in with a small position size. So the market conditions are mainly for position sizing. Okay. Fundamental, the quarterly EPS growth should be more than or equal to 40%, preferably 3/4 of acceleration. Similarly, for sales, this is a mistake. Sorry, let me make this 25%. Okay, this should be 25% sales growth quarterly. Okay, this is quarterly, not annual. Greater than or equal to 25%. Let me make it Q. If you're taking a screenshot, let me do it like this. Okay. Quarterly sales growth more than or equal to 25%, 3/4 of acceleration in sales growth, positive annual EPS growth for 3 years. So from third year to second year, if it drops, it doesn't meet our criteria. Okay. Stability should be more less than or equal to 25. The lesser, the better. Quarterly EPS growth should be more than annual EPS growth. Annual EPS growth should be more than or equal to 25%. This is 3 to 5 years compounded annual EPS growth. It is given in the market Smith table. Okay. Net margin should be improving, preferably should be at an all-time high. Annual EPS should be at an all-time high. Return on equity more than or equal to 17%. So we are really looking for a growth stock. Apart from this, we look at the CAN Slim criteria. Out of the CAN Slim, the C and the A is about the EPS, quarterly and the annual EPS. So C and A is covered out of CAN Slim. C means current earnings, A means annual earnings, N means new product, new management, or new high, right? So this is about new high, so near the 52-week high. Then S is about supply and demand, that we will look later. L means leader, it's a leading stock with good relative strength. I means institutional demand, so institutional sponsorship, which is covered here. And M is market conditions. So we look at market conditions. So most of the CAN Slim criteria are covered except for that S in this supply and demand. That is a subjective topic because there you have to look at the outstanding shares, the free float, and things like that. Not very important. This is the main thing. Okay, you understand this criteria very well. No stock will meet all the criteria. Okay, but we have to find stocks that come very close to this criteria. Okay, and then accordingly decide what position size we want to take. So I wanted to make this quick video, just a summary kind of a video. I've already discussed each of these in detail, but it helps to have a summary overall view. The liquidity, comparative, technical, and fundamental are a part of stock selection. Remember, filtering, shortlisting, stock selection, and then comes position sizing. Okay. Market is about the position sizing. I will see you in part number 18. Thank you.